Hi guys, and welcome to our video for today, the 15th of June 2026. So a different style of video for today. We're going to go over the stock SPCX. Obviously lots of talk about this, lots of hype about this, the SpaceX, the Space Exploration Technologies Corporate. I don't know if that's what it's called. I really know not that much about the stock, to be honest. I only know how to do technical analysis in the stock because that's my skill and specialty on my profession. So we're going to look at it on a technical basis and just do some technical analysis and see what the next target is in this. I did say after 176, we did a free stream for Atlanta Trading, so you can check us out, link in the description and the Twitter bio. We did a free stream last Friday, and I said over 176, it should go and hit 190 to 200, and it's on the course to do that right now. It's currently up from this 176 area around 7%. So not too bad. It's it's a large cap at the end of the day. It's not small caps. It's not massive price increments. 7% is a lot. Typically, you'd look for a 2% move on a large cap maximum, really. So a 7%, that's 3 times more, isn't it? So very good movement on this one. So yeah, we'll get right into it. So we're going to just chart it from scratch, really. So I had 150 as the key level. That's the price we got listed at. And then we've also got 200 as a massive psychological number as well. And I also had 135 as a level if we were to lose 150. So 135 could be a level we can put some bids in, because typically we have 20-30% gaps between each support and resistance, but that's for small caps because they're more volatile. But on this one, because it's a large cap and is going up slower in contrast to most small caps that we trade, as you see in this channel, we use 10 to 15% gaps. We just half it between each support and resistance typically. So instead of 20 to 30% sort of gaps between each support and resistance, we do 10 to 15%. So I have 135 as the next level beneath, and then I had 176 as another level to break just in here. I'm going to put it in purple. So for my levels, and this is important because when we break a resistance, we typically come up to the next one. And let me just double check. I think this is around 15% in size, just over 15%. So you can get away with that, to be honest. We look for 10-15% size gaps here, but if it's 9 or 16, or I'll say that's about it, just 9 or 16%, you can get away with it. Same when we look for 20-30% gaps. If it's like 17, 18, 19% gap rather than 20% gap for your support and resistance, you can get away with it. And the same for 30% gap. If it's 31, 32, 33% gap, you can get away with that also. But generally speaking, roughly around 20-30% gap for your support and resistance on a small cap, 10-15% rough gap for your support and resistance gaps on your large cap here. So yeah, this one's obviously trending up. This is a half an hour time frame. It looks good for continuation in towards that 200. To be honest, it looks very good. I do expect this to hit 200 at some point soon. When I turn my indicators on, we can see we're in the falling wedge, and there's a good chance we come and retest the Bollinger Band Center around 176. Maybe the trend's up when we test around 180, perhaps. But to be fair, that's not far from where we are right now. I'd say around 178, 179. So again, this is a large cap, so the difference between 179 and 180 actually is some sort of difference, considering how slow this moves in contrast to small caps. But yeah, I mean, this one, generally now what we need to do is keep on trending up towards 200, the target, and that should happen. It's going to be a slow burner. It's going to take a few days. This isn't quick. It's large caps, so the large float, large market cap, so it's going to be a slow mover. But generally it should keep on continuing up towards 200 on this one. It looks good. Basically doing its golden cross retest here after 60 EMA. After trending up savagely, now it's coming to retest 60 EMA, look for a bounce, and we should, once we break 190, we should break up towards 200 on this one. So I'm just going to shove this in purple, like this. And yeah, similar to what we did previously. So I had 176 as a level. So the 15th here. I'm just going to turn off the extended hours. So yeah, we had 176 here. Did a fake out over it, never properly broken upon it. And then I was waiting for 176 to break last time out. On Friday. We never did it. However, it came back down, it consolidated. And when I turn extended hours on, you can see clearly it just came back down, got picked up in after hours. And this 176 level, we broke it today around 12 noon, which is a key level to break, as a constant rejection here. rejection here. So once we got over it, I expected 190, 200 to hit, and 190 is almost hit, and the ricochet after 60 EMA should enable us to hit 190 on this one. So ultimately, we need to break 190. So if you're looking for a new position on this for a day trade or just a little swing, when we break over 190, we should swing in towards 200, and that's around, I think, a 3% move, is it? 5% move, so not bad for a large cap, I guess. However, though, on the downside, if we were to lose, I'm going to shove this in yellow now and call it 175. If we were to lose 175, you'd probably be coming down to 165. As this 200 EMA is going to keep on trending up, and what can happen is by the time you catch up to retest 175, the 200 EMA is caught up here, and if you were to lose this, you'd be a failed golden cross retest of 200 EMA, and you're looking for 165. But you just got to go step by step. So break over 190, you can look for a new position towards 200. That looks good. If you lose 175, maybe a short, or maybe scaling in around 165. But I would ignore the scaling in. Now, maybe a short would be good, but I would ignore the scaling in, because if 165 doesn't hold, once we lose 150, once we lose 175, if we lose 165 next, we're coming down to 150 probably, and that's a listing price. So that'd be a good entry point. So I think it's worth having some bids around 150. I wouldn't be surprised to see us revisit that at some point soon, over the next 2-3 weeks perhaps. I think it was up forever, so maybe we hit 200 and start to trend down. But ultimately, the stock looks strong, and there's not too much we can say about it apart from when we break it down into levels like this in the 5-minute time frame. It's only 2 days young, this chart, so there's not really too much to say on it. But again, like I say, I don't know much about the technicals, the actual fundamentals in this. I just know the technicals and technical analysis in this. So that's my skill. So again, if you're looking for a new position on this, over 190 would be a safe bet, because we'll break it and come straight to 200 for a 5% move. And if you're looking to scale in from a lower point, you can maybe try some at 175, as it's a key area of support, because it's going to be strengthened by the 200 EMA on the 5-minute time frame for golden cross retest, which is really important and strong. But again, I wouldn't fully scale in properly with all my position. I would leave some remaining in case this 175 doesn't hold, because then we can get in at 150. So if you want to get in low, put a bid in around 175, and hopefully we'll come there. However, if you break 190, just look for 1 or 2 shares or something, or half a share, etc. Whatever you can afford to your situation, which isn't too much, as we should gap up towards 200 on this. So 200 is coming on soon for this. It looks good. And again, if we lose 175, it's coming for 165 and probably 150 on this. 135 would be the dream, but we just got to take it day by day and see what happens on this. So yeah, not too much to be said. And we can just check the money flow index real quick. Right, so there's more room on this. So the money flow index, I'm looking at the 30-minute time frame here. So the money flow index is basically an oscillator, as you can see at the bottom of the screen, which I'm highlighting just here. And basically it's a line graph which goes from 0 to 100. When it's at 0, it means there's no money in the stock. And typically around 20 is a level where it's oversold, the stock, and there's not much liquidity and volume left in it. And there's too little. It doesn't make sense. There's too little of investors in the stock. It doesn't make sense. It can only go up in sort of volume. And when it hits 20 to 0, and when it's at 95 plus, that's when it starts to reach a peak. So we're currently at 63.5, so we've got another 30% or so increment to go up before we start to be at a peak in terms of money flowing into the stock. So there's loads of liquidity that can come into this and drive the price of stock up even further. So looking at it in that component, I don't think, I think the upside is more likely than the downside. I think breaking 190 and hitting 200 is way more likely than coming down to 175 and losing it and going to 165 in the short term for the next move. In the short term for the next move, I reiterate, short term next move. That's important to understand, because obviously after that move, the short term and next move of it breaking 190 200 perhaps, then it can maybe retrace from there and come down to 150, etc. gradually. You just got to take it step by step. So more money can come into this. Just put the money flow index on your chart. It's a free indicator to use. When it's at 95 plus, that's when you want to start thinking about taking profits and then maybe it's getting in a lower position, etc. It's currently at 63, so there's more room on this. And break beyond 190, we'll see us hit 200, definitely a massive psychological price target. And in the short term for a 5% move, And if we were to lose 175, we'd be coming down to 165 and probably more likely 150 at some point. So I'd just wait for the 165 to be lost, to be honest. And I'd understand to be patient for that if 175 was lost. So they're the areas of attack, basically. Lose 175, scaling around 150 for some shares, and break 190, and yeah, that's a 5% move to 200, isn't it? So it looks good. And this one keeps on trending up. So again, this is all I can analyze on it with those two key components. I mean, the long-term target on this, 250 maybe. 250 with the next psychological number after 200, and that's what we do when there's no support or resistance levels. We go on psychological numbers. So once we break 200, 250 with the main target on this one. But again, it's step by step, and that'll be the long-term target, medium to long-term, sorry, on this one, 250. Again, this is a large cap, and from here to 250, 33% move. So just for some context, we'll go to Amazon. The last time Amazon moved 33% in a day. I mean, that's this, you know, it'd be hard to find. You probably couldn't even find it on this chart. The biggest candle I can see here is 5%. You know, we can go back all this way. The last daily candle Amazon had, which was 33%, would have been years ago. So these are large caps, massive companies. You know, they don't move typically that dramatically. So you know, that'd be an insane investment, 33%. On SPCX. Just coming back to it here. So yeah, 250 be the main price target on this one. It looks good. And yeah, short term we break 190, come to 200, and if we lose 175, probably coming to 150 scaling. So hopefully this video is beneficial for you, so you can add the indicators I have. The main ones being the money flow index, 200 EMA, 60 EMA, 200 MA. And mark these levels in your chart: 150, 175, 190, 200, and 250. So you can trade it just like me without having to watch our videos on a daily basis, etc. And become a better trader. And if you'd like to become an even more better trader, you can find our support with trade reviews, seminars, a whole seminar package and seminar course that I made, as well as being able to book a one-to-one with us, you know, discussing your strategy, and you know, daily analysis, publicized trading journals, everything that we do to help you guys become pro traders like us. You can find that link in the video description and the Twitter bio. So I'll leave it here, guys, and I'll catch you all tomorrow. So thanks for watching, and see you later.